We have another day, another market sell-off on a day when good economic news came out early. The latest GDP number showed growth at 3.5%. That did surpass estimates. And 57% of S&P companies still beating revenue forecasts, although I'd say that's a little light compared to two previous quarters. Consumer spending leading the charge, jumping 4% last quarter. That's the fastest annual growth in 4 years. The White House insisting the fundamentals of the economy are strong. But we know the economy is different from the stock market. So we bring in our bulls and bears debate here. Bob Dahl is chief equity strategist at Nuveen Asset Management. He says the record-breaking bull run still has a way to go. No signs yet of recession. Hugh Johnson, advisor CIO of Hugh Johnson, meanwhile, says there's lots of fundamental reason to be concerned. Hugh, we just outlined some great economic numbers. What are you worried about?
Yeah, you know, Liz, that's where we've been, and where we've been has been really good. The real issue right now that I think investors are concerned about is where we're going. You know, this is the 116th month of this bull market, which makes it the longest bull market in history. So just common sense alone says, look, at some point, you know, trees don't grow to the sky. At some point, the stock market economic interest rate cycle is going to end. And when you're at the 116-month mark and you see a decline of the magnitude that we've seen over the last 8 days, you have to say maybe this is it. I kind of agree maybe with Bob that I think the market's undervalued, and I think it's only a correction. But believe me, I'm on my toes watching every one of the so-called tea leaves in the market, and they're not looking particularly good right now.
Let me tell you something about Hugh Johnson. He sits there in Albany. He is running around. He's banging the table. He knows over the years, Bob, just as you do, what signs to look for. However, you are more bullish here, even in light of what we have just seen, and that is the most volatile month in 100 years.
So there's no question people are worried, rightfully so, because interest rates and inflation are creeping higher. That's not good for PEs. And earnings growth won't be double-digit forever, and therefore the E part is in question, therefore we're having a sell-off. So if I put my bullish hat on, and I can do that pretty easily, we have an economy that's still doing well. We have earnings, despite some noise in the quarter. Estimates are still generally moving higher. Lots of companies reporting upside surprises. Valuation levels, as you said a few minutes ago, are down a bunch, and sentiment is very negative, which is a bullish sign for the market. So I agree with Hugh's conclusion. It's a correction in a bull market, but it's probably not over yet.
This is like a camp reunion for we three, because we used to appear 15 years ago on CNBC, all three of us together, and we used to pick stocks. Hugh, go for it. What are you buying with your perspective out there right now? What are your favorites?
Yeah, right now I'm buying stocks that are a little bit on the safer side of the ledger. So I look at the consumer staples sector and buying things like Walmart, which I think is going to give Amazon a real run for its money. I know that might sound as a surprise to most. CVS is another one that I would buy. And then when you look for stocks that have come down and represent pretty good value in the technology sector, a stock like Checkpoint is pretty good. I love NVIDIA. I love Apple. They haven't come down enough. They're probably going to come down a little bit more. So I'd play it. If you're going to buy something now, take a look at the staples sector, because the staples sector is a little bit on the safer side of the ledger.
Okay, Bob Dahl, you go next.
I own 3 of the 5 stocks you just mentioned, so we're on the same page. Names I like: United Healthcare. I want a healthcare stock. It's my favorite defensive area. Comcast reported some pretty good numbers versus expectations just yesterday, and the acquisition they've made. And on top of that, I think the refiners, and I'd highlight Marathon Petroleum.
Hey, great to have the camp reunion. Are we all in for s'mores? What do you say, Hugh?
Let's do it.
You're good, right? Great to see
You
both
bet.
of you. Hugh Johnson and Bob Dahl on what has to be the most volatile week that I have seen in decades. Crazy, crazy week as we close it out.